The key to high stakes trading is to only A, buy the most bullish of assets in the most bullish of sectors within the most inflationary of economic zones, and B, sell the most bearish of assets in the most bearish of sectors within the most deflationary of economic zones. Please note, there is a caveat regarding condition B in relation to stocks. This is because the best shorting opportunities for stocks occur at the start of a deflationary period when market leaders can no longer meet expectations in relation to earnings, revenue, etc. Therefore, if you choose to short a market laggard, then this should be part of a hedging strategy, such as a divergent long-short position. When an economic zone has a high alpha score and a low beta score, please refer to my video titled Trade Ideas for Stocks and Bonds. I will leave a link to this video down below. So before we trade, we must first determine the market leaders and laggards of an economic zone and sector. We can do this with a little bit of price action analysis and a little bit of mathematics. With regard to price action analysis, please watch my video titled Price Action and Technical Analysis for Absolute Beginners. I will leave a link to the video down below. With regard to the mathematical side of things, for our market leadership calculations, we can use one of three comparative metrics. Metric 1, which equals B, which equals the basic percentage change. Metric 2, which equals X, which equals the extreme percentage change. And metric 3, which equals P, which equals the percentile change. We can also define modified versions of these metrics, which take into account the amount of time since a recent market high or low. We will discuss this further later on in this video. In any case, we will define the modified versions of our performance metrics as follows. Metric 1M, which equals B hat, which equals the modified basic percentage change. Metric 2M, which equals X hat, which equals the modified extreme percentage change. And metric 3M, which equals P hat, which equals the modified percentile change. Setting up your price charts. Let tau equal time. Let y of tau equal the price of an asset at time tau. And let capital T equal the data tenure of our analysis. When tau equals 0, which we'll call tau T, let this correspond to the earliest price of our data set. When T equals capital T, which we'll call tau capital T, let this correspond to the current price of our data set. Let's say the market makes a new high when tau equals tau h, and let's say the market makes a low when tau equals tau L. Let y0 equal y of tau 0, let yl equal y of tau L, let yh equal y of tau h, and let y capital T equal y of tau capital T. Let D equal the overall direction of the market. If tau H is larger than tau L, then this implies the market has an upwards direction, and we say that D equals +1. If tau H is smaller than tau L, then this implies that the market has a downwards direction, and we say that D equals -1. Performance calculations. We can determine and compute our performance metrics as follows. Metric 1, which equals B, which equals the basic percentage change, which equals yt minus y0, all divided by y0. And metric 2, which equals X, which equals the extreme percentage change, which equals yh minus yl, all divided by yl if D equals +1, and yl minus yh, all divided by yh if D equals -1. Metric 3, which equals P, which equals the percentile change, which equals D times yt minus yl, all divided by yh minus yl if D equals +1, and D times yh minus yt, all divided by yh minus yl if D equals -1. We can adjust each comparative metric in order to take into account the amount of time since the most recent market extreme, which will either be a market high or a market low. So that metric 1m, which equals b hat, which equals the modified basic percentage change, which equals yt minus y0, all divided by y0 times 1 minus tau t minus tau h, all divided by td, if small d equals +1, and yt minus y0, all divided by y0 times 1 minus tau t minus tau l, all divided by tau d, if small d equals -1. Metric 2m, which equals x hat, which equals the modified extreme percentage change, which equals yh minus yl, all divided by yl times 1 minus tau t minus tau h, all divided by td, if small d equals +1, and yl minus yh, all divided by yh times 1 minus tau t minus tau l, all divided by td, if d equals -1. And metric 3m, which equals p hat, which equals the modified percentile change, which equals d times yt minus yl, all divided by yh minus yl times 1 minus tau t minus tau h all divided by td if small d equals plus 1 and small d times yh minus yt all divided by yh minus yl times 1 minus tau t minus tau l all divided by td if small d equals minus 1. If you have any questions, then please either send me an email or leave a comment down below. Thank you for your time and happy trading.